Hey, good evening, everyone. This is Tim Immel and Jordan Sheppherd here with a fantastic webinar for you have this evening between our two firms. We have some great introductions, some great things to talk about happening in the industry to start it off here. Again, thank you for your time. It's been a fantastic year. It's kind of funny. The alternative investment space, especially with Thanksgiving this late in the year, it kind of slows down in December. Would you agree, Jordan?
Yeah, generally. Yeah.
Yeah. So we have a slew of investors coming into us right now, and they're kind of taking action before the year ends, and it's most important that we're all here today and that we can pay attention to what's going on in one specific market that Beckstone's going to introduce tonight. But there's a lot of things or a few things that Jordan wants to discuss with all of us. But real quick here, I'm going to go over a couple things housekeeping wise that you do get for participating in this webinar this evening. Our two firms work hand in hand together. We're not a custodian. Jordan's not a custodian, but we operate in the self-directed space. We're on the asset side. Jordan is in what I would call the smart side of the transactions that you can do and how you can structure your retirement account to better your overall portfolio tax savings and strategy that you used to invest tax-free and tax-deferred. And it's been a great year for both of our firms. And we're excited and kind of want to briefly chat with Jordan about with you after I discuss the first thing that you're going to get for being on the webinar. It's just kind of where we are, the state of the self-directed market, and what's to come next year and years to come again. But for those of you who have done business with Checkbook IRA in the past, good for you. We are definitely happy for you. And those of you who are on the webinar for the first time, maybe considering, maybe you haven't done a self-directed IRA, maybe you just found us through different sources, different marketing avenues. But at the end of the day, there is a cost to definitely set up a checkbook IRA or a solo K with a checkbook IRA and Jordan and his team. And at the end of the day, the way that we look at it is for us, if you do business with us and the relationship and the protect and what Jordan and his team has done for their clients, that it's worth us for Beckstone to reimburse if you've already set up or you're already doing business with Checkbook IRA, or if you're going to set up a new account with Checkbook IRA, whether it's solo K or or just a traditional Checkbook IRA, Beckstone is going to cover the cost on that if you do business with Beckstone. So, the value to that's anywhere between $12 to $2,000, I would say. So that's something that we can discuss on a one-on-one basis post the webinar, but that is a value right there for you. So for those of you who are planning on making an investment, doing something for yourself and your family, that's something, some little icing on the cake for you for attending this evening. Now, Jordan and I have been talking a lot really the past few months and kind of where the market's going, what kind of activity both of our firms are seeing. And I believe, from what we both gather is we're seeing growth. And Jordan, if you want to attest to that.
Oh yeah. Yeah, the self-directed community certainly is growing. It's been growing for a while, but I'd say in the last probably 3 years, couple of years, it's kind of kicked into another gear. I'm not sure exactly why, but I think that's a good thing. I won't complain about it, right?
Yeah, and at the end of the day, I believe I know, really what's happened is more people are starting to take action and they're starting to see it. And what happens is these, individual investors who have taken advantage of it, being 4% of the population, that's a small niche, right? And when somebody does actually take the steps, there's a lot of people who are curious about it, which is fantastic. That helps us as well. But when they actually see the steps, go through the process and say, hey, look, that wasn't what I expected it to be. Your firms had made it nice, clean, and a transaction that now that it's over, now that I own whatever asset it was their goal, and now they're hopefully performing and cash flowing on those assets. It kind of just reiterates that this is a process. We have to go through the process and the steps to get it done. But once you act on it, and once you own those assets, and once they're performing in that account, especially in real estate, and I'm going to speak for real estate because a real estate is, cash flow is nothing different than a monthly dividend, right? But with the structure that we have, you're getting a net every month, boom, 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 boom. So you start to see that return come back to your account, and you see what the economy is doing in general, and overall, how does that help us in alternative assets? It's fantastic, right? At the end of the day, what we're doing is we're growing our net worth, we're growing our portfolio, in the way that that alternatively speaking, that Checkbook IRA, and I'm that's how I do my business. That's how all my peers do their business. It's the way to go when you can control it. And for those of you who have never owned an LLC, or so okay, but I would say an LLC for that matter, and maybe you think, hey, I've never owned an LLC. This sounds like there's going to be too much bookkeeping to it, or it's going to take too much time out of my day. It really isn't. And when you see it, and when you get educated on owning it and having that asset in an LLC, what I have seen, and Jordan, you can kick in on this at any time, but I have seen so many people who then go out on their own and say, well, I can own an LLC, and maybe I'll become a small business owner, or I'll grow my outside qualified funds, and I'll have an LLC, and I'll start doing this, that, and the other. And it really gives that entrepreneurial spirit to investors that they may not have touched, they may have wanted to touch. So that makes me very happy. And another thing that Jordan and I was just talking to about as well is presidential. If we want to talk about that, what's going to happen with the election? It's kind of funny. My office here is right next door to Amy Klobuchar's from Minnesota, who's still in the race. So we get a lot of inside information from them next door. I'm not going to play any political party one way or the other, but what I've heard, and I was on a big conference call with the multifamily nationwide investing group last week, and basically what I'm hearing a lot of is if it goes to the Democrat side, that after everything that's happened the last 4 years, being a presidential run like we've never seen in the past, just due to constant touches by a president, there's no way that that the economy is going to take a shift that's going to hurt the Democratic Party so fast, so long term. And then on the flip side, what everyone was talking about was real estate, right? If Trump wins, we know that there's only one more run at the gamut for him, and if that so happens that what he's going to do is protect himself all the way through what he's already done before. And what is his number one asset? Being, well, outside of marketing, I would say real estate, right? So we're getting a lot of likes on both sides for real estate, that is. So, take it for what it is. I'm not here to vouch for one way or the other, but there is a ton of confidence in real estate, and there's a ton of confidence in a lot of businesses moving back into the United States. I think at the end of the day that this bit with China is actually going to help a lot of us. I mean, we're seeing a lot of companies that were producing a portion of their product overseas just saying, well, at this time with technology and what we're doing, we can produce it here in the States and ultimately get the same result. So I'm pretty excited about that, and we're seeing a lot of those people who are deciding to make those decisions to do things in the States, guys. They're coming into where the cost of living is low to do it. We're going to talk about that today. We're going to talk about why we're in the market that we're in, who's going into this market, and what's really driving end results for investors. But we're going to start off with Mr. Jordan here, and he's going to talk to you about some very, very important strategies for maybe some of you who currently, there's people that we talk to all the time that have multiple accounts, or they have a custodial account that they opened, and maybe holding an asset from 5 years ago, but they've gone out, they've opened another custodial account, which then invested in an LLC or solo case structure. And what has happened is they're looking to move assets, making their life easier. And I'm going to speak no longer on this. I'm going to let Jordan run the show here, but Jordan's going to come in and we're going to go from there. I do want to highlight real quick here, both of our firms, A plus, BBB rated, and I might have said one too many extra B's, triple B. You can find us on their website. This is pulled today. But here we go. Here's the man of the hour, Jordan Sheppherd. I'm going to let you take the role, and feel free to engage if you need anything. I'll be here, and we'll go from there.
All right. Well, first of all, thanks everybody for taking the time this evening. The first couple of webinars that we did with Tim, the first one I went through just kind of the basics of a checkbook IRA and a solo 401k, and just kind of the whole concept of the idea of self-direction, and then taking that extra step of having checkbook control. And then in the second webinar, I went through, we kind of did a little bit more of a deep dive on what this kind of a transaction would look like in one of those structures, purchasing property and financing part of that property. So if you want to go through that, you can certainly watch those other webinars. I thought what I might do today, just because I wanted to kind of mix it up a little bit, was to talk about what Tim just mentioned, and that is something that surprisingly a lot of people still don't know, even if they have self-directed accounts, that you can actually take assets and you can move them, as they call it, in kind between accounts. And we see this a lot, like Tim mentioned, where maybe somebody calls us and they've been investing with self-directed accounts for a few years, and they decide now that they want to step out into a checkbook control type structure, but they have some old account somewhere with maybe some property or maybe some notes in it or precious metals or something like that. And a lot of times they'll end up just sort of leaving the assets there because they don't know that they can actually move them over in kind. Now, obviously, I think probably everybody on this call at one point or another has moved money between IRAs or from an old 401k into an IRA, or like for our solo K clients, going the other way, moving money from an IRA into a solo K. So I think we're probably all familiar with just a basic, let's say, transfer of cash. You put in with the custodian A wires the money to custodian B, and that's pretty much the end of it. But for assets in kind, and this is going to be fairly short because frankly, there's not a whole lot to it. The first is to kind of get the concept of it, and then I'm going to go through some different asset classes and what the specific procedure would be for those specific asset classes. And we'll start here, but basically just to make it as simple as possible concept-wise, I mean, literally all you're doing is taking some sort of an asset and you are just simply retitling or reassigning that asset from the old account into the new account. It would be kind of the same as if you, let's say you owned a bunch of assets personally, let's say in your name, let's say 10 rental houses. I wouldn't suggest this, but if but if you owned them in your own personal name and then you, let's say, went to an attorney and he set up some sort of either asset protection or some sort of an estate planning type structure, at some point during the process of transitioning over to that structure, you're going to have to take those 10 rental properties and get them out of your name and get them into the, whatever it is, the trust or the binary LLC or whatever they've set up for you. There's going to have to be a transition of that titling over to a new structure. The same basic concept applies here. It's really no more complicated than that. So now in this case, we'll start with an IRA LLC. Here the asset has to be moved twice. So the first step is what you see here, your current account, which could be whatever it is. It could be an IRA, could be a 401k, but the asset is just simply retitled or reassigned into the new IRA's name. The two custodians will work together to do that. Sometimes you have to provide your own paperwork for that. Sometimes you don't. And again, we'll get to that here in just a minute as we talk about different asset classes and exactly how you move those. But the first step is for the old custodian. to retitle or reassign the asset into the new self-directed IRA's name. And then Tim, you can bump to the next slide there. And then here the asset then has to be retitled again if you have a checkbook controlled IRA, like what we set up, an IRA LLC or a checkbook IRA as we call it, because ultimately whatever that asset that is, it's sitting in your old account, you want to get that all the way down to the Z because that's where you have checkbook control. So first step is move it between the two accounts. It's reassigned or retitled to the new IRA. And then once again, that is retitled down into the LLC's name. I mean, basically the IRA makes a member contribution of this asset, right? So instead of just sending cash down to the LLC's account, it's actually moving an asset, it's contributing an asset to the LLC. So same process there. Basically, there's just a reassignment that occurs between the IRA and the LLC. And I'll go ahead and, yeah, so any asset can be retitled so long as it's capable of being retitled or reassigned. And we'll get into maybe some assets that sometimes can't be retitled. But Tim, you can go ahead and go to the next one. And now we'll go through what it looks like with a 401k, with a solo K. Now, solo Ks they're a different animal. This is going to be quite a bit simpler because partly, on the 401k side, you get to be your own custodian, your own trustee is a technical term. And so the movement or the retitling of this asset, you're not having to involve a third-party custodian like you do with the IRA structure. Because remember, with IRAs, you cannot be your own custodian under any circumstances, really. But with a 401k, you can. So here, it's just one movement of the asset from the old account directly into the 401k trust's name. Whatever documentation that needs to be done there, again, we'll get to that here in a second, but you get to do that directly with the old custodian because, again, you are the trustee of the 401k. Now, some of our clients, or if maybe we didn't set you up with a 401k, but somebody else did, it's also possible that your solo 401k might own its own LLC as well, right? Just a subsidiary kind of holding company that's an LLC that you use for different investments. And in that case, of course, you would be back to the kind of the two-stage approach. You would have to move it into the 401k trust name first, and then the 401k could make a member contribution into the LLC, and you would go from there. But again, being your own custodian, once everything gets over to the 401k, all of that stuff is done in-house by you because you're the trustee of the plan. So it just makes things a little bit easier, a little bit faster. Now let's go to the next slide and let's talk about some of these different asset classes and what it would look like if you were to do something like this. Now, obviously, this is just kind of a truncated overview. So, if any of you have any questions after we get done, feel free to call us, shoot us an email. We'll be happy to help you as much as we can. So just kind of going in the order of popularity here, property is fairly straightforward. Typically, the custodians will handle that by just doing a quick claim. And once both sides, of course, the quick claim are executed, you just walk that down to the courthouse, you record it, and that's the end of it. Now remember, again, if you have an IRA LLC, you have to do this twice. So it has to be quick claimed into the new IRA's name first, then it needs to be quick claimed into the LLC's name. So a little bit more involved there, but not a big deal. People do it all the time with property. It's not nearly as hard as most people think. Sometimes custodians will do the quick claim for you. Sometimes they make you do it. Either you do it yourself or have an attorney do it for you. But that's how you do property. Notes and private equity are pretty similar in that typically all that you do is just a simple reassignment, which is generally just a one-pager. Sometimes it could be a little bit longer depending on what exactly it is that you're moving. Notes, like if it's a promissory note, you just do a reassignment, that's it. If you're, let's say, holding a trust deed, you would just do again, a reassignment of the beneficial interest of the trust deed. So again, same basic concept. Private equity, now I'm going to get to a couple of caveats here on some of these assets here when we get to the end. But for private equity, again, same basic thing. So if your retirement account owns, let's say, owns its own LLC, or maybe owns a limited partnership interest or maybe some C Corp stock. Remember, you cannot own S Corp stock with retirement accounts. So, but C Corp stock, limited partnership interest, or some other form of an entity. Again, typically that's handled just by a reassignment. So it's more of a paper swap than anything. Property is different because the titling is more formal, and you've got to record it and do a quick claim and all that. But for private ownership of assets like notes and private equity and all that, usually it's just a private reassignment that's done. That's not filed anywhere. It's just between the two parties agreeing to reassign or move title of ownership over to some other account or some other name. Now, precious metals, I'm not going to spend too much time on this because it's a little bit of a complicated thing, just because there are kind of a lot of moving parts to it. But the basics of it are that if you have physical precious metals held, let's say, by a third-party depository, those metals can certainly be moved over into another account. They can either be held right there at the depository where they have been forever, but just the ownership of the metals changes. Or sometimes you may want to move it off to another depository, maybe with a new custodian that you're working with. It just kind of depends on the situation. Precious metals, moving that over is a little bit more involved just because you have a third-party custodian that you're dealing with, and you also have a third-party depository, because no custodian actually stores precious metals. That's something they always farm out to a depository. So there, the custodian and the depository have to kind of coordinate, and there's no reassignment or anything like that. Typically, it's just the custodian informing the depository that the ownership of these metals has changed from this IRA to this IRA or to this 401k. And then typically you have to keep them there at the third-party depository, unless you have a solo K, because there you get to be your own trustee and you can actually store those metals yourself if you choose to. So if any of you want to move precious metals, I'd say call us first, and I can kind of walk you through, or we can walk you through the steps of that and kind of what to expect. Of all the things to move, though, precious metals by far takes the longest, by far. So just be prepared to wait and wait and wait. Publicly traded assets, those can also be moved over without any issue at all. The only thing that's required here is that you do have to have a brokerage account on the receiving side of the account. So, and that's pretty obvious. Publicly traded assets have to be held by a broker, right? So the account that you're going to be moving that stuff to needs to have a brokerage account that those assets can land in and can actually be retitled to. And they do that a little bit differently, I think, through a DTC transfer. So again, that's something the custodians handle for you, but it can certainly be done. Now, crypto is the only thing on this list, or the only asset I've really ever seen that custodians really will not move over in kind. Now, you'll see in parentheses, I have at least not yet, because I think eventually as technology kind of catches up and these custodians figure out a faster, safer, easier way to hold title to crypto, because that's kind of its own thing with the blockchain stuff. But I think eventually they'll get to the point where they will allow you to move that stuff over in kind. But I've not seen a single custodian that will let you do that. So, just something to keep in mind. Not to say that they're not out there, and if your custodian will transfer that stuff out in kind, that's great. The process there is a little bit different. I've seen it happen actually one time, and then the custodian changed their policies later. So they did it, same thing with a typical just reassignment, and they had to list all the wallets and all that sort of stuff. So it was kind of involved. So I think in the future we'll probably see that kind of loosen up once technology catches up. But for right now, it's pretty. These custodians typically don't like to do that. So just finishing up, a couple of caveats here. The first is, let's go up to the first one here for property. Obviously, property can always be retitled. There's no issue with that. However, if you own property that has a mortgage on it or debt on it, either from a bank or a private lender, or maybe you carried the paper on the property with the seller, when you bought it. One thing to keep in mind is that typically the lender, well, not typically, the lender is always going to have to sign off on the reassignment or the quitclaim of the property. And from what I've seen, if you have a more of a kind of a button up, more formal lender like a bank, typically they just will not let you do that. They won't sign off on it. Not to say that they won't ever, but it's one of those things that I've never seen a bank ever sign off on a movement of property between accounts that has some sort of a mortgage on it, even though obviously you're not pulling any sort of funky business, just moving it over to another account, but I've not seen them sign off on that. Now, if you have a private lender, like with what Tim is working with, I don't want to speak for his lender because I don't know if they'll do this or not, but typically a private lender, or obviously if you've carried the paper on the property with the seller, typically they will go ahead and sign off on it because they can see that you're not trying to pull any fast ones. You're just simply moving it over to a new account, and that's it. But just again, something to keep in mind. The other
And I,
caveat I'll mention. Oh, sorry, Tim, go ahead.
no, I would just say that you haven't seen the banks do it because there's not many banks that do it at all in the first place.
Yeah, well, there's three or four, but yeah, they won't do anything like this. I mean that they're just, you know,
No, there's a
uh,
doing sale.
right. Now with private equity, and you'll see I did put a note here, be aware of restrictions on assignments. This is not always the case, but sometimes either in a limited partnership situation or maybe a C corp or some other fund that you might be involved in, there may be a restriction on your ability to reassign or transfer title of the limited partnership interest or the ownership that you're holding to another party. That's generally not a big deal. It just means that you have to go to the company and they just have to approve it. And I've never seen a company not approve it once they understand what's going on. And typically it's more of an issue if you're dealing with a much larger fund because they don't typically see this sort of thing. But again, I mean, it's something, reassigning and moving ownership of assets around is something people do all the time for asset protection and estate planning and so forth. So it's not like what we're looking at here is something that nobody has ever heard of, right? It's a fairly common thing, but just to say that on private equity, just look at your contracts, look at your, membership agreements, and see if there are any restrictions on that. If there are, probably not a big deal. Just go to the company, explain what you're wanting to do, and typically they'll go ahead and sign off on that, and then go ahead and do the reassignment, and of course the asset can move over. But that's pretty much it as far as that. I don't know if anybody has any other asset classes they have questions about as far as how it would move over. But that's pretty much it. So like I said, if you guys have questions, if anybody wants to go through maybe a movement of assets between accounts and how it would work in your particular situation, feel free to call us. We have a new 800 number. It's kind of a vanity number, 833-401k IRA. It's a little bit easier to remember. So I put the actual numbers right down there below. But yeah, so again, if you have any questions, either shoot us an email, give us a call. We'll be happy to help out as much as we can. I'll turn it back to you, Tim.
Awesome, awesome, awesome. And that's what's great about this industry and dealing with firms like Checkbook Ira. I mean, they're on top of the ball because you go back to crypto, right? And there's an we're always evolving in this industry. There's always change. Uh, you know, people are constantly changing platforms and technology, especially custodians. I mean, there's a few custodians out there this year alone that went through a total overhaul that we've got so many phone calls, I'm sure Jordan has too, from just clients just saying enough is enough. I don't know where my stuff is. I don't know how to access my information. I need this, I need that, and I can't see it. Their technology changed or they sold. There's been a lot of custodians in the last, you know, 4 years that have, traded to bigger firms, and a lot of people, there's a lot of fear there. And when you deal, yes, the custodians are there for an ultimate reason. We all get it, we understand, and we appreciate them for that. But when it comes down to you self-directing and really unlocking your future in how you invest, the time it takes, the cost it takes, sending, do I need wet signatures? Is DocuSign okay? This, that, and the other. Get a phone call. Oh, this didn't work or didn't scan right. All these are things that, when you do business with Checkbook IRA, the amount of time you spend on the custodial side, rolling that 401k or doing whatever it is to get to the ultimate solo K or the checkbook IRA. Heck, once that's done custodially, you're green light. You're going. You have your operating agreement. You understand what you can and cannot do within a prohibited transaction rules, and really, it's true freedom, you guys. And I can't be any happier than right here on this contact. We have Jordan and Peter. If you catch Peter in the next 40 days, I think he'll still be up in Minneapolis. So give him some heck. Give
Yeah,
him some
freezing
heck.
his butt off. Yeah.
Give him some heck for the snow up there. I'm not much better. I'm about 3 hours south, but at the end of the day, they've been fantastic. And Jordan, if you guys have questions, he's right there. Easiest email, just Jordan at, and we'll go from here. But if you don't mind, Jordan, I'm going to kick it in real quick, get these people moving on to dinner and children and
Yeah.
whatever else the time avails. And if they want to speak to us after this, we have staff here as well. For those of you who do not know Beckstone Partners, we're truly a solution-based company. We've been in the market really since 2003. Uh, there was a true eye opening to this market, really what people call the crash. I would not call it a true crash of real estate. If you look at the 100-year cycle of real estate and do apples to oranges, what happened, and I don't need to go off on a tangent on 40-point derivatives and things of that nature, but really, I mean, since the last 24 months, it's very similar growth to what happened in 2008, 2009. But what our firm noticed, and right off the bat, and just by testing one of those banks, that the big three banks that they're not big, but that actually do non-recourse financing, because in an IRA, right, you cannot personally guarantee anything. So when we talk about lending, when we talk about that Beckstone has financing on every single property, it's approved financing because at the end of the day, this is non-recourse financing. So they don't need a borrower to underwrite a property. The borrower is not necessary to anything but owning the asset to the bank. That's it. Because at the end of the day, your IRA, your 401k, whichever entity it is, the true owner. But why we truly, went really big in this is there was a lack of financing available. So when we entered the market, we said, hey, we need to have financing available, which we do have. And then we work on secondary and tertiary markets. We have an entire team. We're here in Des Moines, Iowa. If anybody's been to Des Moines, Iowa, it is Des Moines, Iowa, right? Fantastic place to raise kids. It's actually just a great town, great clean town. Unemployment rate's extremely low, but this is what we call home. But we can invest in any area of the United States, but we stick to secondary and tertiary markets that feed off major metros. We work with firms. The biggest firm that we work with on the asset side, when we're actually going out, when we buy our real estate in bulk, we work with Marcus and Millichap's award-winning. They're a publicly traded commercial real estate brokerage firm. We work with their office out of Washington, D.C. Their multifamily group is fantastic. So what we do is we buy in bulk and we utilize them. But we've been in this business a long while, and it's been a fantastic. It's just great to see. And if you're one of those investors that want to see the results, want to see and hear from clients of ours, I urge you, go to beckstonepartners.com and go to the testimonials section. And a really cool thing about our testimonials, ladies and gentlemen, is everybody's different, right? Everybody has a little bit different, a little bit of history behind them and how they got to here, how they got on this webinar. And what we did is we took all of the testimonials that we have and kind of did a sample set of different scenarios that individuals were in. So, everybody has a unique situation to where that's their first time investing, or first time self-directing, or somebody who had a hardship through 2008, 2009, or somebody who's a seasoned, just a maverick out there, just knows how to invest, but ends up in our hands due to the compliance, the passivity, the financing, and the ease of actually doing business with us, having everything packaged into one deal. We have it all. Soup to nuts. It's there, www.beckstonepartners.com, up on the top. If you see that upper left slide, testimonials, go there, spend some time, and truly listen to their stories, because I won't ever say the word guarantee, but at the end of the day, somewhere, somehow, something will strike a nerve with you and say, you know what, this is kind of my path, or this is kind of my path. So it's great to see. It's great to see other people actually taking action that have done it with a firm, especially our firm, and the results that they're getting. So what we do offer is we do not go out and buy deals that on paper look good, quote unquote, look good. Hey, this number's just out of this world good, but the house is, in a market that's has no growth. I mean, we truly have markets in the United States that are going just no different than Jordan was talking about, the asset shifting, right? We have markets in the United States that companies are going where they need to go to really make their numbers work. And the economic driver for us in these secondary and tertiary markets, that it's economics 101 is real estate, from 10,000 feet above. And what we look at is of course, supply, demand, growth, everything happening in the market. But what we believe in and live and breathe is jobs. What markets are we going into? Because we got to talk. This isn't a flip. This isn't a hot market today and hot market, gone tomorrow. We go into zones that are they're indicated as hot zones, right? That are growth zones. So what markets can we go into that not only make sense today from a cash on cash and internal rate of return, but where are they going to make sense in 2 years, 3 years, 4 years, 5 years down the road, and how is that going to escalate? Because if you everything's about timing. Everything is about timing. You've heard it a million times, but at the end of the day, in real estate, timing is there is a foreseeable future with real estate. Why? Because especially employers, right? Here in Des Moines, for the last 6 months, there's been big drama about a new warehouse going up, and it finally came out. Well, I knew a few months ago, but it came out. It really leaked that Amazon is the one that's building the huge facility right outside of Des Moines, which is going to be fantastic for our economy here, which is already awesome. But we know what's coming. We can see building happening, and especially in the Midwest. In the Midwest, you can really see it because Midwest communities are tight knit. They're safe, and people communicate. And really, at the end of the day, people get to the bottom line if they want to get to the bottom line, because it's not a major metro that you can't get through the gatekeeper, right? At the end of the day, you could be driving next to the CEO of Principal Financial Group, or United Healthcare, and Des Moines is the insurance capital of the world, and we're going to talk about something very similar tonight. But here, you guys, if you don't have a pen and paper, and I didn't say it before, and I apologize, please grab a pen and paper and take some notes of this, because this is why Beckstone is absolutely different. We are different. We are not a real estate brokerage. We're not brokers. Somebody didn't hire us to sell property for them, pay us a commission, and say good luck. The name Beckstone Partners, especially the partners aspect of it, is we are in this deal with you from acquisition to disposition. This is a life goal for us, is to continue to take, whether it's 2 or 4 assets that you buy, or 1 asset, or you participate with somebody else on an asset. At the end of the day, how can we grow your portfolio intelligently? We're not going to go out there and say you're going to buy a house from us for X today and sell it for Y tomorrow, or we're just not going to. What we believe in, and who our client base is investors that understand that they're buying at the right time, they're buying the right asset, they're buying a managed and a controlled asset that is going to net them a monthly return, and they are going to simply own it and let the market do its things, that Beckstone's going to educate them on what is happening. And and due diligence is welcome, because what's happening in these markets is is not going to ever make national news. For those of you who have been on, or I know there's people on, clients of ours now who own property with us in Pennsylvania, right? And what is happening there and what continues to happen, what's happening with our rents right now, how they're continuing to rise. And I'm going to hit on that just a little bit tonight, but I'm going to try to cruise through this as quick as possible and really introduce you to a new market that's going to be groundbreaking. But again, occupancy from day one. All of our properties are rehab, tenanted, already operating right now. Right now, the income is coming in on the properties. We do not sell anything that's not rehab, not fully leased and ready to go. The great thing that we do for that is we have a corporate lease in place, a 24-month corporate lease that you have. That corporate lease is going to entail, it's going to take care of any, anything that does come up that really truly shouldn't come up, because when you buy a property that's passive and rehab and ready to go, if something were to not comply with what it was that we did to the property, if something, maintenance wise, I'm saying, comes up to play, well, our corporate lease is going to cover that. So, we have a true running of 24 months of ownership with us, that if there is anything that needed to be fixed or wasn't tied up a loose end or screwed on correctly, or a washer that wasn't screwed in at the back of the machine, somebody got away with something, guess what? We're going to take care of that. That's within the means of the corporate lease. That's why we have that corporate coverage there. So it's cash flow from day one, and every one of our properties has approved non-recourse financing. Non-recourse means there's no personal guarantee whatsoever. The buck stops at the property. Something happens where there's a loss in your property, although your IRA protects you in the first place. But number two, you have a non-recourse loan that, guess what? The only recourse is the property itself. Okay? Now, this shouldn't enter any fear into what we're thinking today. It's a good thing. It's a fantastic thing to be able to leverage, because what we can show you is we're over 50% leveraged. With the same money, you can really double your investable power, your current net worth. And I'm going to show you numbers here. I'm going to actually show you deals that are available today. And with this new portfolio, with $28,000, you can get into ownership. So I know a lot of you are excited. There's a few of those. Really, it's that mid 40s, early 50s, where kind of the wheelhouse is in this market. But we do have a few one-offs, which are going to create a great return from you. And don't get me wrong, $28,000 is a lot of money, a fantastic investment. We need to protect it. And how can we protect it? But at the end of the day, $28,000 in real estate, especially in non-recourse, unconventional play, is pretty groundbreaking. So drum roll, please. A little corny here, but that's all right. It always works. Boom. This should give you a little chuckle. Some people would call it guerrilla marketing, the negative takeaway. What kind of marketing is Nebraska doing? Well, you know what? Nebraska has really changed. And where we are in Des Moines, Iowa, if you take Interstate 80 west, we're about an hour and 45 to 2 hours, depending on how you drive, to Omaha. So all Iowans are very familiar, of course, with their borders, but especially Nebraska, because when we leave Iowa, if we're going west, anywhere west, you're going Colorado, California, wherever it is, you're going to go down the major thoroughfare of Interstate 80. And our office is actually about 5 miles from the exchange of Interstate 80 and 35. So we have the most traveled through state, but bringing it westbound, we're right into Nebraska. So we know it very well, which gives us a head start. But again, honestly, it's not for everyone. What are they saying? Are they trying to perk your interest in Nebraska? I mean, this was on the Today Show a little bit ago. But at the end of the day, what Nebraska is, it's a fantastic state that is evolving. they're changing the way that they think. This marketing strategy alone just woke up so many people nationwide to say, you know what is going on in Nebraska? And it's fantastic because it's a beautiful state. It feeds a lot of us, right? Just like Iowa, it's in the heartland here. But what's happening on the eastern side of Nebraska? Because the western side of Nebraska is pretty much like a treadmill at your house. If you get on the treadmill and you run, you see the same thing the whole time. That's kind of what western Nebraska is like. But on the east side is where the action is happening. And of course, we all know the Oracle, right? Warren Buffett here in the same house. We've all heard this story. But if you look at the numbers at the bottom, he bought the house for 31.5 1958 or 250 in today's dollars. It's now worth 652,000. So on today's buy, being worth 250, and now it's worth 650, saying that the cost of his money was 31.50. Look at the return there. Still, even today, this guy is making money in all facets of real estate. Doesn't matter if he, lives in this home or whatever. But if you look at the economics of what that 31.5 in 1958 is worth, or 250 today, 5 times the money, or more than 5 times, of course, 7 times, but 8 times. But at the end of the day, this is what's happening in Omaha. And Omaha is protected by him. And people might laugh, but it's the kind of economy that's a little better than steady Eddie always. A little better than steady Eddie always. Now, again, you might think we're just staying home, but this is a true emerging market. If our office was in Los Angeles or New York City, we'd still be in Omaha. It helps us that we're here, don't get me wrong, but this is a true emerging market that we have been analyzing this deal really for about 6 months, you guys. And it takes that long. Underwriting, the institutions that own these assets, it takes a long time for us to underwrite our deals. But then again, you have a non-recourse lender that's looking at each individual property as is, right? And they're going to finance that with never meeting you, never doing anything outside of seeing one statement with the funds in the United States. So we do business with individuals in 1031 exchanges. We do business with foreign nationals. But our bread and butter is the self-directed investor. That's who we do most of our business with. So Omaha, let's go over, I'm going to just use data in the news, what's happening. The media is the media, but what is truly happening in these outlooks, it's phenomenal. And going there and living there, being there, my wife is from there. It's one of the craziest things that we've seen here in the Midwest because the growth that's coming there, it's already great right now. Without the stuff I'm going to introduce, safe market, great play, better than Steady Eddie. But what is happening? Number 2 in the nation now, or number 1, excuse me, per what I just pulled here today, Omaha represents 4 of the top 12 zip codes. This is in the entire United States. Omaha is only 500,000 people, right? And we're looking at, for the top 12 zip codes, when there's a total amount of zip codes in the United States of 41,702. Think about that. 4 of the top 12 zip codes right here in Omaha. In your retirement account, your active money outside of a retirement account, 1031 exchange, all this can benefit from this. If you look at this list and what is happening here, it's essentially the entire geographical area of Omaha is in that top 100. It is growing like hotcakes. We're home to the 5 Fortune 500 companies that we all know about. ConAgra, I believe, is the newest one into the group. ConAgra feeds America, and it's fantastically placed. If you're in the grocery business, you're very well familiar with ConAgra. Kiewit. Kiewit went really big out west, especially Colorado, California. But Kiewit's home is Omaha. My actual father-in-law worked for Kiewit for about 25 years as a foreman. It's a fantastic company coming out of Iowa, and I would say you meet a lot of people or know a lot of people that work for Kiewit, and of course the baby Berkshire Hathaway guys. Berkshire Hathaway, I believe they're going to take a even bigger stake in real estate over the next 10 years than they already have. They've already got the management software growth going, as well as I believe we're going to see a lot of brokerage, because a lot of brokerages, being in this space and talking to people, you're going to start to see the brokerage business really change. It's already started to change, of course, for your realtors and industry professionals on the call tonight. But I mean, if you go to look at an open house anymore, it used to be that the seller's agent would be at the house and they'd be there with cookies and making the house smell beautiful and having an opinion about everything that you had going in with your broker. But what I believe and where we're going to see a shift is it's going to be one-side brokerages, basically an automated sales side, and then there's going to be buyer's agents. And because, when you look to sell a home, you can get advice from a realtor, but if you want to list it for 200 and you tell the realtor you want to list it for 200, it's going to be 200. But if that realtor is not showing up and there's a key lock and a code and an app to get in the house, what are you paying that person for is what everybody's starting to say. They're starting to say there is value. And we're starting to see those value add brokerages pop up. And I think it's going to be like anything, like Uber, right? You're going to have the Uber, and then you're going to have a couple other brokerages that do it good, just not as good. But I believe there's going to be a big facelift in the industry, especially over the next 5 to 10 years. It's going to change a lot, but I think Berkshire is going to take a huge stake, and that's because of this, you guys. Have you heard of Silicon Prairie? What is happening in the Midwest is phenomenal. Just like I stated, Amazon coming here in Des Moines. Well, what we have just west of us in Omaha is we have technology like no other. We have PayPal's headquarters located right in Omaha. Their campus is phenomenal, and the amount of millennials, the amount of tech entrepreneurs that they're bringing into Omaha is soup to nuts, second to none. It's fantastic. I mean, you have people like Huddle, which is a firm that essentially they're making recruiting streamlining. They're taking athletics, and I think it might even be scholastical now. They were talking about it, where we're going to be able to really see, in institutions are going to be able to see, how either athletes or just students are performing, what it is, their numbers, but they can actually see it on tape, so that cuts out the traveling cost for recruiting. And colleges are trying to figure it out, especially big colleges are trying to figure out the shift in technology and where we're going. But what's driving that is constant decisions and constant change. But what does that mean to us as real estate investors? That means tenants, right? If a new firm comes in, hires 300 people, right? Probably 50% of them will be from within the market. And if they bring in 150 people from out of the market, what does that do to us as the landlords? In a market like this, even 150 people taking on 150 new rental units within a market will cause a shift. And that's going to cause rents to go up, which we're already seeing. Every single turn that we have, we're seeing about a 3 to 5% raise in rent in this market, which is only going to go up, right? So it's all about owning it today and watching these markets and watching these businesses enter the market, because the cost to do business in the Midwest is probably a fifth of a major metro. So you can go in there, have like-kind companies, which are going to have like-kind people, which know each other, and which only adds to the phenomenon of, placing this here in the Midwest and saying, how can we grow here? Because at the end of the day, nothing's stopping us from growing. You can come to Iowa. If you would see Iowa and Des Moines Metro, and towns like Waukee and Ankeny, the sprawl that they have, well, as long as the numbers make sense on a acreage standpoint, yeah, they have standstill farmers that are holding on to their ground wanting a number, but eventually that number is going to hit the inflationary rate that it makes sense for them to sell and for somebody to buy. And that's what we're seeing. It's all supply and demand. And we're seeing the same thing in Omaha. You're seeing so much. And here's an unbelievable achievement. This is actually, if you look at the slide on the left, Papillion is Omaha. It's a neighborhood in Omaha. So Papillion is here, October 4th, 2019, you guys. $600 million data center. That is second to what's in Council Bluffs, Iowa, which Council Bluffs touches Omaha without the river, right? Just over the border. And what's happening in Council Bluffs is unbelievable. That expansion alone is driving the economy. And I know it so much because I hear about it all the time from my in-laws, because they actually sold development land about 10 years ago, just about 4 miles away. And their friend who held out sold his development land, which was up a little bit higher on a field, for about 4 times the money. And it's so crazy to hear the story about what the developer's doing. He's basically selling off all the dirt at the top of this Council Bluffs. It's very hilly. They're cutting it down. They're feeding the Google data center. They're feeding them dirt. And this guy is loading trucks up, sending them there, and cutting it down until he gets where he wants his development to be squared off. But when he knew the whole time that that's why he was going into it. Played as if he was just going to develop on the bluff, but then is selling off all the dirt. And we've done the metrics on it, and he's already probably returned himself 200% just on dirt alone. So it's fantastic, though. This is happening in the economy. People are buckling down. They're taking advantage of it. But the only people that are taking advantage of it are the people who act on it and own it today. And here we go. Just to add to it, you guys who have heard us talk about the Panama Canal expansion and what it's doing to the eastern seaboard of the United States, how it's affecting our markets right there off the Port of Virginia. Well, subject to size, this is a very, very, very monumental effect, just like it. Epley is doing a $500 million remodel of its airport right there in Omaha. And what that's really doing, and what's really driving it, it's a lot of Southwest traffic. Southwest, of course, always continues to grow in the ancillary tertiary markets, but they're looking at Omaha to be a true hub for them. Because if you look at Minneapolis, you look at Detroit, and of course Chicago, that's either American United or Delta ran. So a lot of people are looking at this growth, and Southwest hasn't come out and said too much about it, but they're hinting towards it. That what's going to happen is this $500 million remodel is only going to spur to these people coming into town. Anytime you're limited by air traffic, it limits business as well. So this is a huge push for business. This is a huge push to bring these big namesake companies into this market and really grow. I mean, just this alone, the amount of chatter, the amount of people who are so happy, because it's not only Omaha, it's everybody within that radius from Sioux Falls, South Dakota to Des Moines to everywhere, Kansas City, everywhere around here, that people are saying, you know what, we're going to be able to have destinations that we've never had before, within a few hour trip. When before we had to drive to Chicago, pay $100 a day to park your car, and you know how that goes. So at the end of the day, there's a value add that I cannot wait to see our investors who take action in tonight to really be able to go over. So I gotta take a quick move here where I move something on my screen over. All right. So here we are. Deal fundamentals. I'm going to just go over some deals. I know it's getting towards that time about what we have available for you guys today. So Benson is probably the fastest little niche area growing with millennials like no other right now. It's the area that the gentrification has happened, and people are starting to move in, the bars, the restaurants, the activity, everything, the amenities and the culture, the parks, the music, everything that people want to enjoy in life outside of work is all happening in these areas. So you have all of these beautiful homes that have gone through a life cycle with others. They've been the upper echelon, and then there's downturn age of homes, and then what we've seen here is what's happening really nationally in the Midwest is you're having your downtown, what we like to call vibe, brought into these areas of the market. So, and what happens is you can pick up right now homes like this where the neighbor 2 or 3 doors down could be going through a tear down and putting up a new construction house that's going to be on the market for $450,000 in that market. And what happens is everything just trails right behind that. So you get a good, great, fantastic quality built home with character. That's the most important thing I like to tell everyone. I mean, I'm in the middle of a rehab of a home that was built in 1958. And, going through it, you start to see history. You start to see, you know, people really thought before they built on a lot, before they said, will this size of this house work here? They said, well, how is this lot going to be lined up? How is the sun going to rise and set? How's my day going to look? Where should my windows be? But there's all kinds of different little fun characteristics to these homes. Typically speaking, this would be kind of at the upper echelon of where we're going to be price wise in this market. This is in an unbelievable neighborhood, parks all around, all kinds of opportunities. But again, let's look at the fundamentals. Let's look at the numbers. Let's look at how it's performing for you, the investor. So on this, we're looking at purchase price of 199.9. That's approved, lender approved financing, and down payment is just so you guys know and everybody knows on the call. Typically speaking, in an IRA transaction, especially non-recourse transaction, because that's the only way it can be, you're going to see interest rates, anything from 7% to low teens, really, depending on what the opportunity is. Of course, higher the risk, higher the rate's going to be. Those speculations of buying a burned down home, things of that nature. You're going to have to go hard money, where it could be whatever the law will allow, as high as it goes. But here we're talking rates between 4.5% and 6%, depending on the asset, but it's already approved. And for a general rule of thumb, 60 LTV. But if you think about it, 60 LTV is better than no LTV, right? So if you were considering buying this house and didn't even know that you could leverage out your IRA, you could be buying 2, maybe 3 homes with the same amount of money, maybe 4. So again, down payment 79.9, non-recourse loan is already approved at 120,000. Expenses, debt service, taxes, and a 4% management fee. A lot of people are going to ask. We do a 4% management fee the first 2 years to get familiar with us. It's a process where it's not so much a profit deal, for us on the front side. It's a relationship deal. So it's a 4% management fee encompassed within the lease, the corporate lease that we have. And your corporate lease on this amount is $1,585. Monthly cash flow of $532.50 a month. You're looking annually at 63 and change, $6,390. 8% cash on cash return. With this market growth and with everything happening, if you want to see the back end calculations, rates, all that, of course, we're here to talk to you about it. And of course, we will. Internal rate of return we're looking at here, IRR, 34% after your first 12 months, you guys. You're not going to see anything with the availability to do that and outperform these internal rates of return on a cash basis, right? Why internal rates of return is so very important to real estate investors is that we like to make money in 2 ways. I like to make money on cash flow, number 1. Number 2, I love when I buy in the right market and the market does what the indicators are telling me it's going to do. And what does that equal? Appreciation. We're not out there going to say that, you're never going to say, remember Steady Eddie, just just a little bit better, that's what we're going to see. And when we calculate our figures, we go below that. We just go steady Eddie, and you're going to see those figures from us, and you're going to say, well, honey, or well, myself. At the end of the day, it is an IRA. Does this make sense to me? Do I want to own this home? Do I want to cash flow? Because more than likely by tomorrow, this house will be sold. But you know, for you guys, this is kind of a constant within the portfolio for us. But we do have limited inventory, of course. Inventory does move quick here. Here's another home, beautiful house. This one's, with that 53,900 down payment, purchase price 129, cute little bungalow. We're seeing cash on cash returns of just north of 8%. Internal rate of return, that IRR right at 30%. A beautiful, beautiful home right here in Bunalusa, which isn't too far from Benson. It's another cute, it's all within that same scope of neighborhood where we're gentrifying, we're growing. That's where we want to be. We don't want to be buying new construction in our IRA. We don't want to be doing any of that. We want to be yielding returns, utilizing rehab properties and getting that value, walking in with inherited equity. Every month you're going to get a statement. East King Management is the management company that will be managing these for you. But what it is it's a constant communication between East King and yourself is pretty minimal once the investment's underway and you own it. But again, anything you ever need from us, from East King, we're right here for you. You're going to get your statements. Your money's going to be ACH directly to your account. That's your net cash flow every month. Oh, wait. Did I forget to mention Lincoln? You guys, Lincoln as well. Highest one-bedroom rent increase in the nation right now is Lincoln, Nebraska. So they only indicated the one bedrooms, but I'm pretty sure what we're seeing in the two bedrooms is right in line with it, and the three bedrooms. So you guys, college town, safety, healthcare, all of it's here. Lincoln's about an hour from Omaha, but they all kind of encompass the same, metro when you look at the end of the day. But again, here's the facts. On a national ranking, Lincoln, Nebraska is number 10. These are different snippets from different articles. Lincoln's housing market, upward swing, not slowing down. Lincoln, healthiest home market. Lincoln, Omaha, Omaha. Ladies and gentlemen, this isn't just Beckstone saying, hey, here's a good deal. There's everybody out there is indicating, come look here, come invest here. This is going to yield you some fantastic returns. Deal fundamentals in Omaha, down payment 64.9 on this home, cash on cash returns 8%. Internal rate of return on this home, 29%. All of these homes are going to be able to benefit you from owning that asset. So, really, I know that we're running tight on time. I just want to cruise through a couple other things. I know I cruise through the deals, but you guys, it's so important to know when we're out there researching markets, we work with third-party organizations as well. Get our data, work on our acquisitions, keep our P's and Q's. To deal with firms that are publicly traded and highly looked over, and everything that we're doing is in compliance with them. Everything is doing it for the better good of the investor. Finding that these markets. Again, I was talking about the Port of Virginia, a little bit of history on us real quick. I know it's running a little bit late, but again, some things we're still doing business in Pennsylvania. We'll continue to do business in Pennsylvania because the Panama Canal expansion is only getting better with the Infrastructure Act of 2019. I will do another webinar on that. But you guys, being set up for the way that America imports, exports goods, and Omaha all plays into that as well, with Interstate 80 coming right through. But again, we have properties in both Omaha, Lincoln, and now, in both Hanover and Lancaster County, PA, and now as well to the west in Omaha and Lincoln. But you need to get with us, to get with one of our senior advisors and talk to them about, what is best fits for your goals, your family. and I want to kind of address this real quick, is, it is all about passivity when investing in a self-directed IRA. There is a lot of investors, and there was investors that we've talked to that, when investing in your own area code, your own town, in a self-directed IRA, even if it's checkbook, if the IRS were to, come and audit you, there's a lot of investors that self-admit to us all the time that, hey man, if they were to audit me, yeah, I fixed that house, but what are the repercussions of doing that? That's the last thing that anybody wants to do, is to deal with that life event. And at the end of the day, when if you are an active, handy guy, you love to do it, I advise just go with the safe side. Go with the professionals. I mean, consider us the doctor, right? Consider yourself the mechanic of whatever you do on your own car, house, whatever. But at the end of the day, you want to go to industry professionals that understand markets, that understand your goals, that understand what you need to get, right? What does your end result want to be? And if you want to be in a growth market, if you want to be in an emerging market that's going to yield you fantastic returns with a firm like Checkbook IRA and Beckstone, and what we do and how we take care of our clients. I mean, the great part about it is when I have conversations with Jordan, or my team has conversations with Jordan's team, it's when there's an issue with a client, it's not like we have to explain our client to each other. I can say, I'll just use Smith because it's easy, but you say so and so Smith, we all know it. We know that person. We know about their family, and we want to, because we care about this. Because at the end of the day, you guys, it's 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 not about tomorrow. It's about 5 years down the road, 10 years down the road. I mean, my father always says to us, close your eyes and think about 9/11, right? And think about how long ago that truly was, and think about how long ago it feels. And those are real things. And then he says, well, what would you have done? What would you have invested in if you would have known that you would have been here today? And it's one of those things where you look at it and you say, well, geez, it's crazy. Anything can look good for a day, but what is it going to do in the future? And you got to stick to the economy. You got to stick to the jobs. We do still have properties available in an unbelievable market as well. In Hanover County, this is a situation here. This is a home that we have. You're looking at this house at 10% cash on cash return. Internal rates of return here, 21%. It's a growth market, but again, an appreciating market. Oh, this just actually is closing today. This was just put out there. That was a duplex opportunity that we had in Hanover. And again, I highly, highly urge, go to beckstonepartners.com, go to the testimonials, watch them, and just kind of just sit back and watch. You don't need you can listen to it in the background. It's all sound driven. There's not a lot that goes on the screen, but about seeing actually the client, seeing what they say about Beckstone Partners and their experience. And a lot of them will talk about Checkbook IRA as well, and 100% positive about their experience. But again, thanks again for your attendance. And I hate to read off a screen, so I'm going to kind of let it sit up there. But we truly, truly believe in passivity in your retirement account. We believe in the right market. We believe that you can sit back and you can unstress yourself from the market, unstress yourself from the drama. I know the market's been good the last couple of weeks. Who doesn't? I mean, look at Twitter. Look at what he says. We all know that. So what are we supposed to do? Maybe we're here for a reason tonight. We're here for a reason tonight because we know, guess what? We just went for a little run. Should we be exiting the market now? Or do we just hold tight and just say, maybe it's going to go more. Maybe it's going to go more. Sure, maybe it is. But what's the bell curve going to say? What's real estate going to do? It might take a little bit more time to show up on the news, but why do we care? At the end of the day, the market is all about, selling at a high. And I believe that we're all here for a good reason, to increase your returns, your success, your legacy through this journey. And this journey, has to start. If you've been pedaling around the idea of self-directing, if you join this webinar, I believe in your heart, it's the right thing to do. And it's the right time is today to take action, because kudos to you for just being here. Truly, kudos. 4% of the population is truly self-directing their IRA. That doesn't mean you have a TD account that says it's self-directing. You make your own trading decisions. Truly self-directed means you're owning an alternative asset. That means that you are thinking other and that you are thinking differently. And guess what? Breaking status quo is how your most successful people that we all know did it. And they didn't do it by contemplating on the idea. They took action. Contemplation doesn't work. What does work is picking up the phone, striking that email, and saying, let's get serious about this. Let's look at this. And if you're a seasoned investor as well, you know the story. But if you're not, that's fine. And we love to educate. We love to take the time between our team and Checkbook IRA's team. We're here for you. So if any of you would like to, we actually do have a team here that can show you specific deals. We can talk about your personal situation. You can call in on the main line here. We don't have a fancy number like Jordan. We got our own 515-414-8794. That is the main line that you can get an associate if you do have questions, you do want to talk tonight about a specific deal. But if you do have to go feed yourself, kiddos, do different activities, get a workout in, we do understand. We do have people on the call actually from the other side of the country tonight to Hawaii. So at the end of the day, today, time is now to take action. I think I hear Jordan there. Join me again. Thanks for muting your phone, Jordan.
Yeah.
But
yeah, absolutely.
Jordan, great webinar. You guys, everything that Jordan talked about was a conversation that him and I had, because a lot of people have been coming up and saying, can I shift that old account? Can I control it? And Jordan, hey, one thing that did come up, and I think a lot of people can understand, is if you do have a custodial account that owns one LLC, and some people have, I know a lot of people have a different custodian that owns a different LLC, right?
Right.
I
Well,
think it
yeah,
would be
you can always move the LLC as well. That's the thing. Let's say you have a checkbook IRA LLC structure, and for whatever reason you just don't, you get to where you don't like your custodian, or maybe they raise their fees or something. You can always switch custodians. Just take that LLC and just move it as an asset over to a new IRA at a new custodian. So that's always possible as well.
So how would that move? That would just move the entity that's already in the LLC. Let's call it custodian A, custodian B, and then you have your LLC with A, your LLC with B. The ownership
Right.
of property, let's say, that's in LLC A never changes. What happens is the vested interest in the LLC changes from custodian. Is that correct?
Right. Yeah. So nothing within the LLC changes. Not the bank accounts, not the name, not the tax ID number. If you're in the middle of a deal, you don't have to put that deal on hold. The only thing that changes is, think of it this way: the LLC keeps doing its thing, but in the back room, the ownership has changed. So it's really a paper swap. In the back room, IRA 1 has stepped out, IRA 2 has stepped in now as the new owner. So typically the way it's done is you can either do an amendment to the existing operating agreement, or I think the better way is to just completely restate the agreement, because you may have some different requirements with the new custodian, when you move over. But bottom line is, you do an amendment or replace the operating agreement showing that new IRA as the new member of the LLC, and then that has to be signed off on, of course, by the custodian and so forth. But yeah, you're bumping the ownership of the LLC from IRA 1 to IRA 2, and then everything inside the LLC, it doesn't affect that at all, right? Because it's only the LLC ownership that you're moving.
Okay. Very good. And I've actually, talked to a few clients in that situation. And I myself, when I started, I had two different custodians, with each of them having individual entity, and I just sold one asset that was in one and just started
Right.
investing in the other one as well. So that's always an option. You know, there's always deals out there. We know, Jordan knows, we hear it all the time. Hey, this is great, but I get all these emails all the time with different opportunities. And the most important thing for investors is just look at the scope of the investment, look at what it's going to do to your life as well. Lifestyle change with investments when you're going alternative. I've seen some people really, really, really stress themselves out over getting too much information and trying to do too much. They're going from real estate to Bitcoin to metals to this to that to the other, and then they just don't ever act on anything, and then they just get burnt out of it. And I mean, the burnout stage can be pretty quick if you're a busy professional, you have family, you have times, you have all this, you've never dealt with alternatives, somebody else has dealt with it for you, and now it's all in your shoes, and you think you need to do everything in the world to get to the right place. But the fact of the matter is other people are taking action on it right now, and investors miss out. It's one of those things when you walk away and say that coulda, woulda, shoulda, and that's not who you want to be. You're a pragmatic investor. You take the action today. You own it. You get that first check to your account, and then everything calms down. And we're here to make it as easy as possible. Jordan and his team are here to make it as easy as possible for you. It's important. But if you don't explore with us tonight, well, good luck to you. And again, it doesn't have to be tonight, but if you explore and want to go out and do something else, well, thank you for entering the space and being in it. And we'd love to illustrate to you. And if you do have an apples to oranges or whatever it is, you want to, say what makes more sense in my personal situation. And if you just have questions, or statements or comments, concerns, criticisms, we'll take it all. And we love it. So we love meeting new people. I know Jordan does too. I know if you haven't met Pete, he's a gem to meet too. Pete is he's got a great, the guy's got a whole scope of everything from one end of the spectrum to the other. He's the kind of guy that just knows a lot about a lot, but a little about everything. Wouldn't you say, Jordan?
Yeah, I'd say so. Yeah, a lot of experience in real estate for sure.
Oh, fantastic add to your team years ago. But yeah, so Pete's awesome. A couple guys that you'll meet here: Kevin, Jake, Dallas, and our team. We're all just a tight knit group, and we're here to better all of you, and to see what you can do with the future. Is we put a lot of it on us just with you, so we're looking forward to it. Jordan, thank your team, but thank you especially for your time. And everybody, if you did catch tail end or know somebody else who could use a version of this, we'll have a recording hopefully up and ready by tomorrow afternoon. So if you do have any questions on that, you missed some of it, it's not the end of the world. But again, also I will recap with the deal for the attendance here tonight. If you have paid Checkbook IRA to set up a checkbook account or solo K, and you've already done business, you've been having it for a year, 2 years, 3 years, whatever that is, it's fine. We can get a receipt from them, and we'll credit you that if you do business with Beckstone Partners. If you're just doing an account with them, due to compliance, you're going to pay them for that. And then if you do business with us, we just reimburse that with a credit on the settlement statement. So that's a huge value add there. And we just look to earn your business and just really educate you on what the future can really look like, paint it out for yourself. So thanks again, Jordan. Have a fantastic night. I'm sure I'll talk to you tomorrow, and everyone else, cheers. Have a good night. God bless. Thank you.
Yeah, thanks.
Yep. Bye-bye.